Hello. Hi, everyone. Nice to see everyone gathered here for the first ever ECHELON Philippines. My name is Mansi. I am an investor with Monks Hill Ventures. We are an early stage venture capital firm that invests in both tech and tech-enabled opportunities across Southeast Asia. And I'm super excited to be speaking with Pavel Fedorov, the co-founder and executive chairman of Salmon FinTech. Now, Pavel, neither of us are Filipino, but we obviously share a love for the country. And, I grew up here, you're building a business here. Would love if you could maybe spend a couple of minutes just walking us through a little bit of an introduction and what brought you to the Philippines. Take it away.
Melissa, thank you so much. I mean, it's my pleasure to be presenting in the conference, and I think it's a fantastic event to talk about what we're trying to achieve. Now, our journey to the Philippines is actually a peculiar one, right? Because myself, I was born in Russia, grew up in the States, worked a lot for investment banking industry, right, in technology business. In my last position, I was actually co-CEO of Tinkoff, right? Tinkoff is one of the world's largest digital banks. Back in 2021, we're listed on the London Stock Exchange. This market cap of about $25 billion. And we're actually very actively looking at expanding outside of Russia. And the benefit we had was actually the benefit of looking at the outside world, almost from the moon. Okay, saying which country do we want to be in? And we had our own metric, right? Set of metrics. Okay, well, how do we choose a country? I mean, first one, we wanted that country to be full of lovely, joyful people. That was the first metric. Secondly, we wanted to make sure that we had a low penetration of basic credit products, hindered by structural or historic reasons. And we found 2 or 3 of these countries, right? And there are multiple reasons which explain why that is the case in the Philippines. But the fact that the, consumer debt to GDP, unsecured consumer lending to GDP is something like 7%. And unique credit card holders in this country probably around 8 million people, whereas with this GDP per capita, it should be more like 30, if not more. I mean, that seemed to be very appealing. We wanted the population to be very young and full of hope for better life and seeking to live their life in what is a modern world, which you live in a totally omni-channel kind of environment, right? I mean, you can go to store, buy things with the same ease. You can do this on a mobile phone, but we wanted to be that a very called tech native type of population, and the Philippines really stands out here, right, because of a very young average age of 24 and a half years, right? And I think the final criteria for us, or one of the finals, was actually relatively poor quality of the legacy banks, right? We wanted to put the consumer first in the market that we enter, and we felt that in many markets, the old banks, which are very focused on incredibly profitable corporate business, they're not putting consumer first. And it's difficult to measure NPS in these countries because many countries, people that just don't do it. So in the Philippines, I think is a case in point where, people are just not actively measuring this, right? But for us, for example, one of the proxy criteria for this was the rating of the big banks mobile apps in the App Store, right? You know that the Philippines is, from emerging markets, is, I think one of 2 emerging markets where the big mobile apps are rated at 1.6 for the biggest banks in the country. And that's a certain tragedy, right? Because that means that customers do not love these banks. Mm-hmm. And the final metric for us was obviously a visionary and very progressive regulator, right? Because I think despite some of the legacy issues in terms of the market environment, we wanted to see a regulator with whom we could have dialogue, regulator that's really truly caring about financial inclusion and bringing change to access to credit and key financial services in the country. And from this perspective, the Philippines was a true, outlier on the distribution of other regulators, right? And I've spent quite a bit of time in the rest of Southeast Asia and many markets across the world. So that was a set of metrics. And then we said, think of guys, I mean, this is our priority market. Let's go ahead and start to build a bank. Obviously, the war happened. It became rather difficult to do it as part of Russian banking institutions. So myself, a few of my colleagues, I mean, some of them in the audience, George, Rafi, co-founders, they also left the institution. And then we said in July 22, let's do it on our own, right? Because the market is here. This is being confirmed on so many directions. And that is where we start building the institution. And as a part of our vision, we acquired a Rural Bank of Santa Rosa, Laguna, which actually is our point of application of all the efforts, right? So we started as a consumer lender, but does this work? But here I am, Mansi, as the director, not so much a co-founder of Salmon, which is, I mean, it's difficult to strike it out from my biography by now, but here I am as the director of the Rural Bank Santa Rosa Laguna, right? And as I said, we started here as a consumer lender, but having acquired the bank in the beginning of 24, essentially all this year we have been migrating towards the bank, right? And the vision that we have is that next year, already hopefully, early next year, we will migrate all of our efforts in the country in the bank, right? And we'll operate here as Salmon under the roof, under the license, powered by the license of Santa Rosa, of Bank Santa Rosa Laguna, hopefully also rebranding ourselves as we go along. Right? It's a very simple story. We are the key credit enabler in the economy, right? What we do, we actually provide very easy, convenient, transparent access to credit to people. And that opportunity, in my view, is humongous.
So talk to us a little bit about the rural banking strategy. Was this always the sort of central strategy for Salmon? And if not, when there was a point in time when you decided to acquire the license or acquire the rural bank, what was, I guess, the key opportunity that you saw that really kind of led you down this journey?
That's a great question. Let me make a step back, right? The way we think about the market is we don't think in terms of does the rural bank represent an opportunity in it by itself, right? I mean, the existence of rural banks is a function of the historic structure of the Philippine economy, right? And regulatory regime, right? So I mean, they're out there, hundreds of the rural banks out there, we know, right? The world is changing very fast, right? So the way we think about this is we're more opportunity-centric rather than rural bank-centric, right? The opportunity that is here, the opportunity we're focused on is bringing easy, transparent, convenient credits to underbanked Filipinos. This opportunity just put things in context, okay? When we created Salmon in 2022, I remember the slide, I think we might have went even to your venture, with a slide where we said, okay, the whole market is $13 billion unsecured consumer lending in the Philippines. And maybe with the aggressive growth, we call it the aggressive scenario, it will be $28 billion by 2028. Okay, guess what? 2 years passed. Yep. The market today, look at the official BSP stats, is $23 billion. Yep. So I mean, it's growing by leaps because people want to live fulfilling their dreams. Somebody wants a karaoke machine for their bar so they can make money. Somebody wants to buy, convenience goods for credit that allows them to spend more time on children's education. But in essence, we help people to obtain credit in an environment where the key condition for the big banks to provide credit card to people is to already have a credit card, right? You have to have a credit card before you get a new one, and then it just becomes a closed loop cycle.
So, I think that sounds obviously incredible, but in practice is very difficult. As we all know, financial inclusion is this big, hairy challenge, and most banks don't actually bank the underbanked because for them it is a relatively unprofitable strategy. So, what is it about Salmon and the Bank of Santa Rosa, Rural Bank of Santa Rosa Laguna, that is unique Is it like, what is the sort of secret sauce that you've unlocked to really do financial inclusion at scale? Is it better collections? Is it better education? Talk to us a little bit about that, because TAM, of course, is big, but CAC and NPLs are tough to overcome, especially in this segment, historically at least.
Mansi, you're asking a $10 billion question. I think what really differentiates us is the... Sorry, could I have the next slide, please? What really differentiates us is the ability to use all available information and technology to separate the risks and separate good borrowers from bad borrowers better than anybody else in the market. Okay, I'm talking about here as somebody who's building this currently at Rural Bank Santa Rosa. So, I mean, we are migrating early next year. All of this capability will be within the bank. It's migrating from consumer lending company at this stage. But if you look at our numbers for the bank, nothing speaks better than numbers. In the space of 6 months, I mean, you're saying it's a hairy challenge. In the space of 6 months, we've built the fastest growing and the highest ROE bank in the country. Okay, so we've grown in 6 months, we've grown our assets 8 times, recording the ROE in excess of 50%. This is one of the most attractive opportunities out there. Why is that? Because when you give out many small loans using the technology and algorithms that can separate the risks, but by the nature of these loans are uncorrelated, right? So if you look at the standard deviation of the portfolio of loans that you give out, and we give out hundreds of thousands of loans, right? So you understand the context, right? How the scale of this. The real standard deviation on these loans, because they're uncorrelated, they're across the nation. I mean, on many islands, we're now present in the majority of islands in the country. So we have true nationwide footprint being present in 2,020 locations, right, where the loans are sourced. So that's where we actually achieve superior returns.
So are you saying that because your strategy is posited on diversification in some sense, that...
Because we are able to get access to information, and this is something that big banks have not understood. All information to score the underbanked is already there. It exists. It exists at big retailers. It exists at payment companies. It exists at the big banks themselves. But they have not been able to use the technology to integrate all of this data into one proprietary data backbone, and use advanced technology to extract risk separation features from this data. And over the last 2 years, I've been able to do it. We're actually making money on every first loan that we make, right? And as a Rural Bank of Santa Rosa, we're acquiring this technology now very rapidly from financing companies, bringing this inside, bringing people, technology inside. And we will be, hopefully, as early as next year, we'll be dispersing loans on our own, right, both offline and online, to be able to deliver these products to people.
Thanks for the explanation, Pavel. We're talking about ROE. One of the products that you promote, at least you've said before, as well as in some of the slides I've seen, is deposits, right? So savings account, attractive interest that you can earn if you deposit with Salmon or with Bank of Santa Rosa. How are you kind of balancing between attractive savings rates, cost of capital, ROE? I feel like this equation is often quite difficult, especially as a challenger bank, I guess you could call it, right? Everyone wants increasing deposit, it gives you leverage, but at the end of the day, it's a huge liability as well. So talk to us about that.
Mansi, I mean, you're spot on, right? I mean, this is actually one of the biggest challenges for what's called like the legacy banks, right, or the digital banks that try to grow through deposits, right? And they're very conservative, right? And sometimes, digital banks, they try to gain market share, and they go with very high rates, but they don't have the working credit machines on the left-hand side of their balance sheet. They don't have super profitable loans that they're able to send these deposits to. The reality of the situation that the population, in my view, the average consumer if you look at the legacy banks interest rate offer of 0.5%, I mean, sometimes people offer 1%, those are very low rates. In the context of inflation that is currently here, I mean, receiving 0.5% on your deposit per year is a joke, right? The only reason people do it is they have no choice. They have not been able to see the competition that actually can offer attractive rates. At Rural Bank Sta Rosa Laguna, we actually offer the best deposit rate in the country. Today, we offer 8.88% per annum on deposits. That basically means you can double your money in 5 years, in 9 years. Okay, which is crazy, right? And the reason why we're able to do it is because we have a working consumer lending credit engine on the left-hand side. And we can take this money and profitably deploy them to hundreds of thousands of loans, consumer lending loans, which are out there with low risks. And the 2-3% difference that we still make, right? I mean, doesn't matter, right? Because we have great portfolio on the left-hand side, and we can build sustainable business. But we want to be rewarding our depositors. We want to be rewarding our partners, right? Because they are providing long-term funding base for our business.
So I think maybe we can spend a minute or two talking a little bit about the kinds of product adoption you've seen. So one is, of course, the diversification of your loan book or the book that you've built. But do you find that the kind of target customer that you have is moving towards a certain type of product? Is there something that is, I guess, most top of mind for Filipino, credit-hungry Filipinos?
That's a great question as well, right? I think the key change that will be happening in this market will consist of several factors. First, you'll see much deeper penetration of credit in the economy, especially when it comes to ability of average consumer, underbanked consumer to access credit, right? I mean, think of 3, 4, 5-fold increase from the current levels in 5 years' time. You look at the consumer lending to GDP in Vietnam, Thailand, even Indonesia, I mean, is almost 1.5 to close to 2x difference. So I think if you look at macro trends and the macro tailwinds, you'll see much higher penetration of consumer lending in the country. And you can see over the last 2 years, looking at BSP stats, unsecured consumer lending in the country was growing at the annualized rate of 42%. This is one of the biggest opportunities out here, okay? Second change that will be happening is that, and I'm deeply convinced, the Philippines will be migrating towards a QR-based society, towards a more cardless society. We've seen it in India, we've seen it with UPI, we've seen it in Brazil with Pix. We're obviously seeing tremendous progress that InstaPay, PesoNet make here, right? I mean, just look at the numbers. They're almost doubling every year. The compounding of this will have tremendous effect in the economy. So one of our key products we will launch at Rural Bank Sta Rosa next year will be the revolving credit line, which runs on QR rails, right? And that, I mean, so it's basically, it's a virtual product that lives in your phone. It's a credit line that's available to you at any point of time. We say, okay, Monty, I mean, you have 100,000 pesos that's available to you at any point of time in your application. And you walk into a merchant, you see the QR code, you scan it, takes 2 taps, you're done. You have no number that could be stolen from you, like in a credit card. I mean, nobody can crack up your account and just take the money away from you, right? Because I mean, you haven't withdrawn this money, so it's kind of our money. If somebody steals it, they steal from us, not from you. Okay? So there is very little fraud, very security-proof, fraudster-proof, and at the same time, it's available across the country. If you look at comparable stats, okay, Philippines versus Brazil, the usage by the average Filipino versus average Brazilian of the QR payment, okay, it's 1/30th. Okay, think of the fraction. 30x could be the increase in the usage of QR, right? So that will be changing the site. That will be changing the way we think about the cards. We will not have cards anymore, okay, in 5-7 years' time.
And you paint a great picture And clearly there is a lot of potential. But I'm curious to understand what it's going to take to get us there. So one is, of course, the natural market tailwinds around a fast-growing economy, which Philippines is among, I think, the top two in ASEAN alongside Vietnam. So, there is some of those tailwinds that are working in your favor. But a lot of the times, I think some of the biggest impediments to these kinds of models is customer education around just understanding what it means to even take credit, and then, of course, collections. So how are you thinking about this? I mean, collections is the backbone of every lending business. But I would love to kind of understand how, you guys are building maybe like an innovative model around that.
That's a great question. I think what that will take is a couple of things. First one, I think, is the continued regulatory push, right? I mean, what I've seen from the BSP to date was an absolutely phenomenal execution on the vision of driving financial inclusion in the country. Right. So from our side, we love the dialogue. We love the fact that the regulator is very focused on achieving, making a change in the difference of ordinary Filipino, right? And obviously that the push that will be continuing for many years forward, right? And to me, I mean, they are able to mold the environment where competition thrives, because competition at the end of the day is the underlying force of improvement in the economy, right? That's kind of the point number one. Okay. Secondly, financial education and literacy, I think, is a major driver, right? Because people need to understand what it means to have debt, what it means to have credit score, what does it mean, how do you save money, how do you spend it wisely. Just to give you an example, right? I mean, our consumer lending companies that are outside of the perimeter of the bank, but still, so they launched, for example, a few months ago, and it's in demand by people. We launched, 3 months ago, a financial education series called Salmon on TikTok. Okay, just in 2 months, we reached 1 million views. Simple, short videos that deliver a message. People are very hungry for seeing, basic things. I mean, and you don't need to be very overcomplicated. Just basic things, how to get your financial life in order, how to get right. I haven't seen other stats, but I think in the recent times, that's probably one of the widest educational campaigns for the underbanked that has taken place in the country. So we are very responsible, very conscious, right, for making sure that we're doing the right things. One of our biggest shareholders is IFC, the International Finance Corporation, right? So, I mean, they have very big financial inclusion agenda for a country. And from our side, we're obviously doing everything to justify their trust and obviously the trust that we have from the regulator on what we're doing. But to me, it's a joint dance between the regulator, educating the consumer, and obviously, listen, I mean, the hard part or the easy part, whichever way you look at this, which is delivery on our side. And it's lots of work, right? I mean, 14 hours a day, with a big team, trying to make change in the days of day-to-day lives of ordinary Filipinos, making sure that they achieve their financial ambitions. That's our life here. So, and that's great fun.
I would love for you to also maybe comment on the collection side, though, because I do think that this is a lot of fintechs, for example, in Indonesia are actually doing it backwards by solving for collections first and then eventually going down towards the lending side. How do you kind of look at that balance between collections and growing your loan book?
Our philosophy is a bit different. Right, because we believe that if you can correctly predict the behavioral patterns of your customers, and we believe that with the richness of data that we're able to obtain in terms of alternative data, in terms of the other sources of data, right? I mean, on how people behave, right? If we can predict well what they do, collection will be less of an issue. So we're putting the real emphasis on understanding our customers' minds. And believe me, I think each of us in this room underestimates how much of the information is out there. I mean, I don't know, have you tried asking OpenAI, what do you know about me? Have you?
I'm too scared.
Okay, do it. Okay, and you'll be surprised. I mean, I did yesterday. So I think there is lots of information about behavioral parts of everyone's behavior, right? That's out there, right? And we need to be mindful of this, right? So we're obviously tremendously respectful of data privacy and everything else. But whatever we can commercially obtain to be able to predict people right, that actually just de-emphasizes the importance of doing really, really, really extensive collection engines. You need to get the loan issuance, loan disbursements right. It's not about collecting money from people. It's actually making disbursements right in the first place. That's the first thing. Secondly, I think technology will disrupt collections.
In the major way, right? Because for example, I mean, in the Philippines, you used to have think like 7 years ago, lots of, multiple ID standards, right? With lots of fake IDs, lots of fake identities. Now we have one ID, which is our face, right? And we use face recognition technology. So if there is a fraudster who's coming to get a second loan from us, even if he's got a different passport, I mean, the face recognition technology is really disrupting the way loans disbursements will be handled in this country, right? Because we'll be able to pinpoint the person in a very sharp way. Okay. For example, we launched, it's been public 2 months ago at the financing company level, and again, we're going to be bringing this to the bank in the coming months, is the auto debit with Gcash and other banks. So, I mean, if you take the loan from Salmon financing company, you actually also sign up the auto debit.
So I think we're
running.
No, we're opening it up for audience questions. Sorry, please finish your sentence.
So and then people won't sign up for a loan. They also sign up for auto debit from their Gcash or bank account, right? And if somebody fails to pay, I mean, we don't need to go to somebody's house and just wait for him until 8 p.m. till the person comes back from work and just have a chat about life. We actually just go to the Gcash, we show the contract, and we take the money, okay? And that's the way it should work, okay? It will become more and more technologically advanced, right? And so things will be changing, right? So technology will be disrupting the collections part of the business, and I think de-emphasizing the nature, because it's becoming more and more difficult just to play the type of games that required very kind of extensive on-the-field collection networks.
Understood. So the cost structures are potentially changing with access to better technology as well. So we are opening it up for audience questions. We have 2 here so far, so feel free to continue to add them via the QR code. I think it's up there.
I told you, QR codes.
Exactly. So the first question is, the most profitable and fastest growing digital banks in the region are able to capitalize on a closed loop customer base. For example, Bank Jago in Indonesia. It provides better data quality insights and lower CAC. How do you compete with these models? There are close to 12 digital banks in the Philippines who may have this advantage over Salmon.
That's a great question, right? I mean, I think what's important here is putting the emphasis on the right things, okay? Bank Jago and the absolute majority of digital banks in the Philippines, they have started their journey as a debit-led banks, okay? And Bank Jago, if you actually look at their balance sheet and what they do on the credit side, I mean, they mostly work with other fintechs and other consumer lender companies to take on the balance sheet their exposure, okay? So it's not a true credit enabler in it by itself, right? So what we started doing, right, at Bank Santa Rosa Laguna is we're solving the difficult part of the equation first. We're not starting with like some super high deposit rate, which is not supported by the underlying business, okay? The underlying business to us is ability to source, at this stage, portfolios of consumer loans from our financing companies. And as we just finish off our transition and just move everything under the umbrella of one bank with sort of the rest of the adjustments, that will be ability to provide loans, right, to customers. If you have this profitable and scalable machine in your business, you are able then to develop the debit product that will be supporting this with long-term funding. That this is the virtuous cycle you try to unwind. I think the talk of the closed ecosystems, right? And I mean, people talk about Grabs of this world, the Gojeks. Listen, guys, I mean, look at the net P&L of Grab FinTech, okay, for the last 5 years. Okay, just take a look, okay? I think the talk of ecosystems is overhyped, okay? I think you need just to be doing lots of difficult work to get the difficult problem of lending solved first. And if you put the right emphasis on this, the rest will follow.
That's fair. I also think within a closed ecosystem, you only see so much of activity, right? You can only really underwrite what is on the ecosystem, and therefore you miss out on all the other data points that you've been speaking about that are fed into your models. We're actually running out of time, and so maybe as a wrap up, you could talk a little bit about what has been your biggest challenge so far. So it's been 2 years, you've scaled tremendously, you obviously have a rural banking license, there's a lot of opportunity as we've spoken about in the country, but what has been the most difficult and what kind of continues to keep you up at night?
But thank you so much. Well, I mean, I would say there are two challenges here, right? I mean, or 2 or 3 challenges. Let me put it this way, okay? And I mean, sorry, they will be very comprehensive, but the first challenge is obviously 24 hours per day, right? Because building, and we had a very small team when we started, right? And even now we feel that we're not big enough, right? So 24 hours per day, and obviously tremendous pressure. As like in a venture environment, when you're building a business, it's like, I mean, I told you, right? It's like, it's a balloon, you're inside of a balloon. The balloon is coming to you from all sides, and not to suffocate, you're just pushing your hands into multiple directions at the same time, trying to make sure that it sort of, fills with air and flies. And this is obviously the number of constraints you have in any startup, in any venture business, is big enough for you to kind of, to be running out of time. That's the first issue. Second issue has been obviously growing up internally high quality technology talent. It has been an issue for many years that I mean, if you're a super bright programmer, right, from University of Ateneo, right, it's easy for you to, you can fly anywhere, right, from a country, right? You could fly to, I know, California and just be making money, right? You're English speaking. It's very difficult, for example, for the same, for Indonesia, right? Because in Indonesia, I mean, English is not as common. So, integration of people from some of the other markets in the global workforce, especially on the development side, is far less than that of the Philippines, right? And it's great advantage for the Filipinos, but at the same time, it's a disadvantage for industry as a whole, right? So what we need to be doing, and we've been doing this, at great speed, is finding great local talent, bringing this talent inside the house, and making sure that we grow, lots of high quality local people, local talent within the organization. So that's been a very important focus for us. I think we're spending lots of time with universities. We're spending lots of time, just making sure to bring the right sort of capability to us, and that's been sort of the second concern. And obviously the third issue, and I think that's an issue for any business that's trying to build itself as a essentially modern bank in this environment, is access to capital. Access to capital, listen, put things in context. By now we've raised over $100 million to build the institution. And we'll be injecting capital in the Rural Bank of Santa Rosa in the coming months, subject to regulatory approval, but we'll be bringing this, to some very serious numbers in the coming quarters. But having raised this money, we've been raising this money in the context of the, nuclear winter in the venture capital community, right? We've been sort of building this business in 2022, 23, 24. We're very lucky to have been backed by International Finance Corporation, by the Sovereign Wealth Fund of Abu Dhabi, by very prominent investors here in the Philippines. So that's great. But at the same time, there are structural issues with the depths of the local capital markets. The big banks, and we're a company, by now, we go to any of the big banks and say, guys, how about we look at taking corporate facility on, okay? Because our business is growing, it's profitable, we can show you why it's profitable, let's grow together. And the first question we hear is, guys, can you show us the 3 years of audited financial statements? And you go, my God, the world moves at a different pace now, okay? The public capital markets are unfortunately rather shallow, right? So If you talk about Southeast Asia as the capital pool, it's not great. I've seen the United States, I've seen Europe, and I've seen Middle East, right? Even Middle East at this stage is getting ahead of what we're actually seeing, even in Singapore, right? The people who come to us and say, we're able to provide you debt financing or equity, the majority of them, 90%, are US credit funds, US venture capital funds, and they have lots of capital that can come to us with like offers to make $100 million. Big numbers. But why are they coming? Not from from the local market, right? Because there is capital available. Unfortunately, it takes and will take time for us to educate institutions in the Philippines to appreciate the opportunity, right? We're building what Capital One has built successful in the States. There is no successful precedent of this in the Philippines, right? You talk to US investors, you say, okay, Capital One, there you go. That's very clear. Okay, you talk here, they say, well, listen, we have big corporate business, we have loans to these conglomerates, we're making big margins, we're happy. So they don't venture out, they're in the comfort zone. But I think time has come and the world will be changing very fast with technology, right, that I'm talking about, that in 2, 3, 4 years' time, some of them will be asking existential questions.
Thank you. You've given us a lot to think about, and now we are being forced off stage because I think we've gone a little bit over time.
Thank you so much,
Thank you so much for sharing your insights, Pavel. Appreciate all of the candid answers as well. Thank you, everyone, for watching and listening, and thanks to ECHELON. Thanks.
Thank you so much. Thank you for your attention. Thank you.